Hello guys, welcome back to the channel. Today we're going to be looking at the Bitcoin halving, and in terms of what it's going to be doing for the markets, the hash rate, obviously the mining side of it, what the price of Bitcoin is probably going to be, and a lot more information, and looking at transactions and stuff like that. So what we have here obviously is the Bitcoin halving countdown. This is in 10 days. This video will probably go up tomorrow, so it will be 9 days by the time that you see it. However, this is going to occur around April 18th. Now, this can change a little bit depending on the block times and the current block height. So it doesn't have a static date, which is actually going to be, or time. It just depends on when the network hits 840,000 in the blocks. So this could be changing, so keep an eye out. Obviously, it's going to happen around this time and date, but it could move up or down depending on the block time. So we have around 9 days until the Bitcoin halving. And as you can see, it just changed to 11 days, so it's actually gone up, which means that this is now pushed an hour back. So this is because of the block times that we're seeing here. So what does it mean for us miners? Well, obviously the difficulty / the hash rate is going to probably drop off a little bit. I'd say the hash rate definitely going to drop off a tiny bit. It's a good time to probably yield some Bitcoin. Most of the institutions, as in the big mining farms, are probably just going to mine through it. There's no reason to turn it off necessarily. However, there will be obviously hobby miners and stuff like that that will come off the network because it's not profitable for them. So it might be a time to yield just a little bit more Bitcoin. And then obviously the hash rate's going to keep going up. If we look here on the hash rate chart, we see as Bitcoin's price goes down, obviously the hash rate goes down. I believe the halving was around here and the hash rate went down at that point. But since this bull run, we haven't actually seen the hash rate drop down too much. It's actually been steady hash rate going upwards, which is interesting to see, seeming the price of Bitcoin didn't necessarily recover right here, but people were still adding hash rate to the network. But I do think that there's going to be a little dip off in hash rate, so you guys can get some yield from that side of it. And I do think that the price might actually go down just a little bit. It might take a dip off and then probably going to steady out. And then when the supply and demand kind of comes in, that's when we're going to see probably the price go up from there. And then nobody can really tell what price we're going to, but it will definitely be over 100,000, 120. That's probably the lowest that it will probably go up to, but I know that it will definitely go higher than that. Just depends on what time you're selling out your Bitcoin at. Now, for those that do want to sell their Bitcoin in this bull run, I'd say if you're looking to cash out, pick a price and stick to that price. There's always going to be that fear and greed index that comes in. I know it's very greedy right now in terms of the index. However, when it comes to the top of the bull run, obviously, there's going to be a lot of greed on that meter. So what you've got to do is just pick a price and get out at that time. It doesn't really matter if it swings one way or another. You know, you might lose a couple of thousand if you hadn't held on, but a lot of people tend to just hold on because they think it's going up forever. Now, it has seemed true, but it will also go down. This is only for the people that want to cash out at this bull run. And right now might also be the last time that you can get Bitcoin at these prices. So maybe if it dips down to 65,000, maybe below that, I'd say pick some more up. If you're dollar cost averaging, obviously you don't really want to mess that up, but you're going to get a little bit more Bitcoin for your money if you're buying at those lower prices. So I'd say maybe instead of dollar cost averaging on the monthly, do it for the weekly for the next couple of weeks after the halving, because the price is probably going to change a lot going on after the halving. And then I would say around 6 months to a year, that's when we're going to see the supply and demand come really through for the Bitcoin halving. So one thing that people do talk about a lot is the ETF integration. And the ETFs obviously are a big part of cryptocurrency or of Bitcoin. And one thing that they don't note about in some of these articles talking about supply and demand is that I believe at the height of the ETF kind of boom, let's say, around here, there was 9,000 Bitcoin being transacted through those ETFs. And there was only 900 being produced per day. So if you do simple supply and demand, you can kind of see where the price of it has gone up so much. Now, when the Bitcoin halves, there's only going to be 450 per day. So the demand is going to times by 2. In theory, for the economic side, the price of it should also double from here. So 140,000 around that range. The only problem is that obviously doesn't happen because there's a lot of other things and a lot of other factors that are continuing to either decrease or increase the price. But for the most part, I would say that the ETFs are a big part of it. There is also the rest of the world, because a lot of people tend to focus on the American side and they just say that cryptocurrency it's being driven by American investors. However, there are also other investors around the world, which is driving the price as well. I know a lot of it does come from America, but there is also other ones around the world. And then another thing that I do want to talk about this Bitcoin halving is the amount of transactions per day that we're going to see. So previously, if we look on this chart here, this is in the past 5 years, we can see that in the height of the bull run, which was around here, we actually had less transactions. So we had around 300,000 here, and then it dipped down to around 200,000 here. This is obviously after the bull run and the transaction amount went down. But since the ETFs coming in, so this is throughout, 2023, there's a lot of transactions here. However, when this ETF boom came in, this was at 731,000 at the peak. So I don't know how accurate this data is, but I'm willing to bet that it's not far off what the actual transaction amount was. Now, the only thing that we have to kind of be wary of is that the theoretical maximum is 867,470, which means that, we are approaching that closely. So in the next bull run, there might be kind of some pullback because the Bitcoin network might not be able to handle the amount of transactions that is being sent through it. We are approaching the theoretical limit of it, even with these transactions per day by here. It would have been a very full network, and that's why the gas fees were very high when the ETFs were coming in and when people were buying and selling from the ETFs. However, the transactions did come down, but in the next bull run, if we're seeing a lot of transactions on the network, we could theoretically hit this maximum here. I don't know what that will actually do in terms of the economics of Bitcoin, but it could obviously put people out of faith with Bitcoin because of the limiting transactions on the network, which we've never actually seen before for a network. We've never seen the highest transactions possible on the network actually be hit. But obviously, we probably will see that on Bitcoin in the next bull run. I know the Lightning Network can facilitate that, but not everyone is using the Lightning Network. So we'll actually have to see how that plans out in the bull run and if we actually hit this amount of transactions per second. People might also be wary of this, and they might also use different cryptocurrencies such as, Casper or Ethereum or any other cryptocurrencies that have those high transactions per second that can facilitate that. They might even, convert their Bitcoins into Casper Coin and then be sending it from Casper Coin and then on the other end converting it into Bitcoin. But we'll obviously have to see after the halving of what happens within the next year. As I talked about the fear and greed index, right now it's at extreme greed. I don't really feel like this is super accurate because I think it's going based off the price and obviously the buying and selling of cryptocurrency. Right now we're at 78, but it obviously can go to 100, and it obviously has been higher for the last bull run. But I'm feeling that this bull run, a lot of people are going to be scrambling to get Bitcoin just purely based on the fact that this might be the last time that you can get it at these prices of around 70 to 50,000. I'd say if the halving turns out badly, in terms of a lot of hash rate pulling back, a lot of people selling off, then I think that it could drop down to 50,000. I wouldn't say that that would be my estimate. I'd say around 65,000, a little bit below that maybe. And then from there, we're probably going to have some consolidation, and it's probably going to fly upwards from there. 6 months to a year's time, I'd say for the next 6 months, just keep stacking a lot of cryptocurrency. It doesn't really matter which ones you're putting it into as long as they're solid projects. We talk about this on the channel all the time. We have Casper Coin, Ethereum, Radiant, Nexa, Cubic is a new one on the scene. There's a lot of them out there which you can pick, which will probably also ride the coattails of Bitcoin. So I don't think you're going to miss out if you're holding any cryptocurrency that has solid foundations as a project. Now, when we look at the top 10 or the top 20, 30, we can see a lot of them are obviously proof of stake. So I don't tend to buy proof of stake coins. I don't really believe that they have the same kind of utilities, especially with the new technology that's coming in for proof of work. And we've seen the high gas fees on them. There's nothing to necessarily back it. Solana's had problems with the network. I would stick to proof of work cryptocurrencies, but if you find solid projects that might have merged proof of work, proof of stake, like Flux, then maybe I would say go for those as well. A lot of people are still high on XRP. Dogecoin is a good one, obviously being proof of work. I know it's a meme coin technically, but it still has the foundations and the facility to transact cryptocurrency across a network, and it's held up by proof of work. Then we have a bunch of other ones down here. I wouldn't really go for any other meme coins apart from Dogecoin. And we all know that there's going to be 1 or 2 or 3 meme coins which just shoot up out of nowhere. We've seen it before. However, I wouldn't really start to buy into those at all. I do believe in good foundations of technology, people that have built technology in this bear market that will succeed in this bull run. And we'll probably see a lot of proof of work coins start to climb this ladder and take over some proof of stake spots. So that's just my opinion on the Bitcoin halving. If you have any questions, leave them in the comments below and I'll try answer them to my best ability. I'm not saying this is financial advice because it never is, but I've just tried to give you the information and you can make your own decision based off that. So like the video and subscribe for more content like this.